What is the most important thing in the stock market? Well, we all know that the stock market's a tricky place. It's not easy to make money in the stock market, and you've got to be pretty good at it to do so. Well, the most important thing, we'll get to that. We'll get to that pretty soon. Because if you've watched my previous videos, you'll know I've talked about how important it is to manage your risk and how the stock market is really a 50-50 game. The market either goes up or it goes down. There's no magic trick. There's no easy way out. There's no fancy system that's going to make it easier for you. You're not going to go and look on YouTube and watch all these YouTube videos, including this one, and find that magic wand. And one of the big things I've got to say is you've got to stop changing your system every 5 minutes. If you've got a system, what is that system and what are you using? It's important to know. It's important that you stick to a system and you go with it. Just about every system works. It's not about whether it works or it doesn't work. It's about how you manage it. Hey, it's Rob Kilty. It's logical trading. Trading is risky. 80 or 90% of traders lose money, and you probably will too. If you don't like losing money, don't trade. Anyway, so as I say, what system do you use? Let me know in the comments. Tell me what you guys are using. The reason I'm putting these videos out here is because there's far too many, let's say, gurus promoting how much money they make for themselves, how good they are at trading, how much they can do in a day, and they can turn $100 into $100,000, make 2% per day. Let me tell you something. If you make 2% today, and you invested 100 grand, you'll be a billionaire in 10 years' time. So you certainly wouldn't be worrying about telling anybody how to do that. It's not true. None of it's true. It's all BS. You can make a living from trading. You can do the normal day-to-day thing, and you can do it any way you like. You can do it with fundamentals. You can watch the money flows. You can do it with technicals and charts. That's what I use. You can day trade. You can use daily swing trading. You can do 4 hour, 1 hour, 5 minute, 1 second trading, depending on you and how you feel about trading, obviously. I myself prefer maybe the 4 hour to the 1 hour and some swing trades here and there. At the end of the day, whether you're using moving averages, Fibonacci, ICT, bar blah, whatever it is, MACD, RSI, it doesn't really matter. You can use a few of these for confluence in your trading, but don't use too many. Just pick one system, stick with that system. I personally, as you probably know already, just trade support and resistance or supply and demand, sometimes an imbalance. And the only reason I use that is because it makes it very easy for me to manage my risk. It's the easiest way to manage your risk. And actually this video is about what is the most important thing in the stock market. Well, the most important thing is, and now I'm going to answer the question. I'm actually going to get to this now. It's a bit long-winded, eh? Yes. But the most important thing in the stock market, in my opinion, by the way, is liquidity. Okay, so you need a buyer and a seller to make a deal. You can't make a deal, you can't sell anything if there's no buyers, and you can't buy anything if there's no sellers, right? Simple as that. And this is why your system is not perfect. Because if your system says to you, hey, go and buy that, and you go and put an offer in to buy, someone who's selling it to you has an opposing view to you, and his system is telling him to sell it. One of you is right, and the other one is wrong, right? And that's why it's a 50-50 game. If your system is better than his system, you win. It's as simple as that. But it's not about the system. It's about you. And on any given day, no matter what your system, it can go for you or it can go against you. So the trick is to figure out how to manage your risk. So the next most important thing, and I'd say the most important thing in day trading, is risk management and how you manage your risk. So what I will normally do is I'll pick a stop loss area, and I won't keep it too tight. I'll actually sometimes even leave it at a 1-to-1 for emergencies. And then I'll keep an eye on the trade. And if it starts bouncing around and it starts invalidating my initial theory, my initial thesis, and it starts saying to me, hey, listen, I'm never going to work out, because if you look at me now, you would never take this trade. Then that's where I turn around and say, well, it's time for me to leave. I'm out of here, and I'll dump the trade. Okay. Once it's invalidated, so it's not even really a stop loss. And very often, that's very close to my cost. I get out way before the stop loss normally, because I can see the trade's no longer working out and I'm wasting my time with it. But on the flip side, when I'm winning a trade, then I look at it and I say, well, this thing is really rocking, it's going well, let's add some more. And we put some more in. And if it keeps on rocking, we add some more again, double up on that trade, make some more, and keep it going when you know the trade's going in your favor. And then when it comes back, you can start lightening up and getting out. Start lightening up when the trade starts turning against you, not when it's going for you. When it's going for you, add to the trade. So make your winners big and make your losers small. It's such a simple trading strategy. You can learn my trading strategy in a matter of seconds. It doesn't take rocket science. You don't have to do 10-year courses. You don't have to learn all these tricks, and it's so complicated, some of these systems. I mean, there's the Wyckoff system, the ICT trading, this, that, and the other. I mean, I've done them all. They're all so bloody complicated. And, you can keep it so simple by just trading support and resistance. What I would normally do, if it goes into a support, for example, or a resistance, if it's a resistance, I'll wait for the next red bar to come down, and then I'll trade. Or I'll wait in the support for the next green bar to show, and then I'll trade. I will wait for that. I won't just jump into a support on a red bar going down, because it might just go through the whole support and pop out the other side, in which case you turn the trade around or go short. So yeah, it's about as complicated as my system gets. I don't follow the Wyckoffs or the ICTs or anything like that. What I do sometimes do is I'll take a Fibonacci and just check where the levels are, but I won't hold that to gospel either. I'll keep a moving average on my chart sometimes, the 50-day, for example, just to see what side we're on and where we are, because it is like a magnet. It does attract price, but just for confidence. It's not for trading. The VWAP also, it's like a magnet, so it's a good idea to see where it is sometimes. But don't confuse yourself with all that. And I do keep an RSI and the volume, because on low volume you can tell there's something not going well, and an RSI will tell you, well, this thing is really overbought or oversold, or there's a divergence on the price, and that sometimes helps as well. So yeah, the most important thing in the stock market is effectively liquidity. You need a buyer and you need a seller. Simple as that. And the next most important thing in day trading is you need to manage your risk. So with that, I'm going to be going now. So don't forget to like, comment, and subscribe. Leave a comment below. Let me know. Ask questions. No worries. I'll answer them. And thanks for watching the video. And if you got this far, wow. Maybe I'm not that boring. We'll see. Till next time, guys. Bye.